Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is November 7th, 2019, and we again find ourselves in the final hour of the trading day. The way that I view trading is that I view the prices that are as close as you can get them to the close of the market as the most valid price to make your buying and selling decisions from. During the day, you have the day traders, you have the algorithms battling it out. There's a lot of noise, or I consider it noise, during the last hour of the day, and more specifically the last 10 minutes before the close of the day. You have the large institutional or financial institutions coming in, the market makers coming in with size, with large orders. They're the best equipped, they have the most knowledge, they have the best technology, and the way that I approach trading is that I want to follow them, not what the noise is during the regular part of the day. So anyway, I hope everyone's doing well today. Big news today with some kind of agreement with China. It looks like it's a big day up. Dow Jones is up 209 points, the NASDAQ is up 33, and the S&P is up 11. We were up much higher earlier, so this is a little interesting. But anyway, big day for equities. Kind of a mediocre day for me, actually, all in all, but that's how it goes. Not every day is the best day of trading, but the one thing that you can always take away from any unique kind of day is trading is that you have some experience, and staying in this game, trading through all sorts of different type of market conditions will really make you a seasoned trader because you start to see it all. So anyway, let me make sure. Hey John, how you doing? Good to see you, John. John says for today, fate. All right. Let's just take a look at that right now. Well, we sold off before earnings. Looked like we had earnings today. I'm not sure we had earnings this morning. Could be this afternoon. If they're this afternoon, I definitely wouldn't touch it. But what concerns me about this, John, is that we did have a nice rally here, but you see the RSI 47.89. So for some reason, if I would have bought down here, I would have been targeting the 50 RSI, the rejection of the 50 RSI, as a reason to get out of the trade because it rejected the 50 RSI. Remember, when you're under the 50 RSI, most likely that 50 RSI above you is going to be resistance. If you can get it over that 50 RSI, then the 50 RSI will be support underneath you. And your next kind of pricing goal from RSI perspective is up to 70. So if I buy over 50 and it rejects 70, that's my signal to get out. If I buy under 50 and it rejects the 50, that is also my signal to get out. So, not telling you what to do, but you just asked my opinion, right? So, I probably would not get involved with this because it went from very low on RSI, and so far it has rejected the 50 RSI above. So that's my opinion on Fate Therapeutics. John, I hope that helps. Hey Jackson, good to see you, sir. Thank you for coming. Looking forward to our lesson tonight. Hey Johnny, how you doing, bud? Good to see you. Always nice to see you, Johnny. Steve Burns, hey bud, how you doing? Steve says, hey Greg, I will be recording on the the Christopher Uhl podcast tomorrow. Oh, fantastic. Fantastic. Well, I will definitely share that when soon. Let me know when the podcast's out and I will definitely share it. And by the way, Steve, I saw your post on Twitter. New book by Jim Simmons is my top favorite trading books of all time. It is already 19th bestseller on Amazon. The Man Who Solved the Market, how Jim Simmons launched the quant revolution. So I will definitely be checking into that, but I wanted, if you give it 5 stars and it's one of your five top trading books, then I definitely think it's good and I want to share it. So hope you're doing well, Steve. And I'll definitely be looking forward to that podcast. So, all right, well, listen, hey, Jesse, what's going on? Good to see you, bud. Good to see you, my friend. Hope you're doing well. So listen, the plan for today, as usual, going to go ahead and run the U.S. legal disclaimer. After we're done with that, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, what methodology I was using to buy them, or which approach, which strategy. And then I'm also going to talk about how I'm going to manage them either to the upside in the future, either to the upside or the downside. After that, we're going to do a few minutes on trader psychology. You guys know this is a big thing for me. It's a big thing for me because I know it is a huge thing in trading. It's important to learn your technicals, definitely your entries and exit, all that. But at the end of the day, the overriding factor of whether or not you're going to be a profitable long-term trader is whether or not you can get your emotions under control, stay cool under pressure, not buy too much, not buy too little, do what your plan says. But that sneaky emotions, they come in and they can mess with your plans. So we're going to talk about that. Then we're going to go down through my watch list, each stock one by one. We're going to take a look at the support, resistance levels, indicators like MACD, moving averages, RSI, ATR channels. And the way that I view trading is when I look at an indicator on a chart, I look at that as a group of buyers. And if you want a stock to go up, you want to make sure that you're in the company of other buyers, right? In order for something to go up, you need other buyers to keep pushing it up. So what I like to do in my technical analysis, I like to look for a confluence or a combination of indicators lining up. So not only do I just have one indicator or slash group of buyer coming in, if I have multiple indicators lining up together, then the way that I look at it is I have multiple groups of buyers, which give me a better chance to have a profitable trade. So that's how I view trading. That's how I view technical analysis. So we're going to go down through my watch list. We're going to see if anything looks good, anything fits my parameters. If something looks decent, after our first pass through, I'll check it. At the end of the day, I'll go through our potential candidates. Then I'm going to go through them with a little finer tooth comb. And if everything makes sense from a technical standpoint, then that doesn't mean that I buy it. What that means is it kind of passed the first hurdle, but then I have to analyze the risk to reward as well. So 2 steps. Ideally a confluence of indicators lining up, but then you have to analyze the setup to see whether or not it's giving you a good risk to reward ratio. And so if I find something like that, then I'll go ahead, take a position at the end of the day. Then after the market closes, if anybody has any questions whatsoever, please let me know. I'm happy to clarify. If you have a question about something else I didn't even mention, please feel free and I'll do my best to answer it. If you'd like me to look at any symbols like John just did, please let me know. Just type them in the chat. And if you see something, that you think would be of interest or helpful to the group today before the market closes, type it in the chat, maybe put a little asterisk by it or a smiley face or something, just so that it kind of stands out and if it's time sensitive. All right. So that is the plan for today. Not too bad, right? So anyway, hold tight. I'm going to run the US disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay. Well, I appreciate everybody coming today. As always, I really do. It's nice to see you here. And, I hope that you're getting something useful out of the time that you spend here, as far as learning trading principles, investing principles, risk to reward, all that kind of stuff. So Really sincerely, when I say this, I really mean it. I'm really glad to see you guys every day, and I think it's a fun group, right? It's like a little family. So, all right. Oh, Steve says this book is written in a great format too, like a novel. Oh, good, kind of like your book, Steve. Right? Steve, I don't know if you guys know this, but Steve has, he's written many books, but um, one of them, or two of them, the two versions, uh, uh, what's the name now? I'm drawing a blank. New Trader, Rich Trader? Sorry, Steve. Maybe you could type that in there. But that one is actually written like a novel, which is awesome. I mean, we usually read trading books and they're just kind of, step by step and that kind of stuff. But this was actually written in novel form. But anyway, New Trader, Rich Trader. There we go. Thanks, Steve. I really like that book, guys. I would recommend that book. It's a novel, but it's a novel about an experienced trader teaching a younger trader how to trade and all the experiences that the young trader go through. So I thought that was great. So, all right, well, good. It looks like that book, The Man Who Solved the Market, is actually in novel form as well. Hey, Max, what's going on? Max says, hi, Greg, long time no see. I wonder if you track your overall cumulative risk to reward maybe on a monthly, yearly basis. Well, I do, in the fact that, I know what my winning percentage is and I know what my profit factor is. My winning percentage is about 70, sometimes just a little bit over 70% winning percentage, but my profit factor, meaning what the ratio of how much I win compared to how much I lose, is about 1.2 to 1.5, meaning that approximately 70% of my trades are winners, but the winners are, essentially winning $125, 120 to $125 compared to losing $75 on my losses. But the winning percentage is higher and the profit factor is higher. So in a way, that kind of is my risk reward in a way. Jackson says, Greg, when you talk about getting out the rejection of the RSI or even a major average, what about a rejection of a previous high? Yeah, I factor that in as well, Jackson. I factor that in as well. I mean, when we talk about Netflix today, you'll see that. That we had a bearish price action on the bar. We also rejected the previous highs. If you have a 70 RSI that rejects a previous high, that is a pretty big signal to tell you that that might be the top. Not always, obviously, right? But a rejection of a 70, I always get out. A rejection of a previous high, I'm likely to get out. But if I have a combination of a 70 RSI and a previous high, that's a big red flag. If RSI or moving average wasn't there, would you still typically get out? Yeah, I think I probably would. Jackson, because if you reject a previous high, then essentially what you have is a false breakout to the upside. It's broken out above a high and then come back down. Or if it gets right up to it and can't do anything, that's also an issue as well. Joshua, hey, good to see you, sir. Hi, Greg. Hope it's been a good day. Yes, it has. Jackson says, I like these semi-casual book reviews on your channel, Greg. Always on the hunt for new material. Yeah, semi-casual's probably the exact way to describe it, huh? Max says, that's great ratio. Great system you developed. Thank you, sir. Appreciate it. Yeah, it's been pretty steady around there. 70, 71% on the winning percentage, 1.2 to 1.25 on the profit factor. Obviously I'm trying to think of ways where I can increase my profit factor, but of course that's most likely going to come at the expense of the winning percentage. And look, winning percentage isn't everything. There's people that only win 30% of the time and they do really well. So, having a winning percentage, high winning percentage, doesn't necessarily, say you're the greatest trader in the world, because you might have a 70% winning percentage, but your profit factor is less than 1, meaning that you lose more than when you win, but you win more, right? So yeah, I'm always thinking about how to improve my trading, and I think a lot about how to improve my profit factor. But of course, it's probably going to have an effect on my winning percentage. Hey, Marco, good to see you, bud. Nice seeing you. He says, hi, Greg, Steve, and all. Murat, hey, how you doing, Murat? Murat's our friend from Norway. Hi, all. Today I made another mistake in trading. Uh-oh. Instead of sell, I bought it. I immediately closed it with only $7 loss, but then I decided to close down my computer for the day. Well, I think that's a sign of mature trading, is when you can just shut down for the day. Really, it's not a weakness, it's a strength. I was just talking to Jackson about making trading mistakes. Everybody's done it. You want to buy and you actually sell, or you're short and you want to get out, but you're used to hitting sell and now you've doubled up on the short. It happens, guys. Like, literally, take a few more seconds when you're trading and just make sure you're hitting buy when you're supposed to and sell when you're supposed to. When we have more time, I'll tell you about like the worst nightmare trade that I ever had because of this issue. I actually was telling Jackson about it the other day. It was a monster. Marco says, New Trader, Rich Trader is a really great book. I agree. And Steve says, thanks, Max. It's hard to trade 30% win rate as human, in my humble opinion. Algos can trade that consistently, but humans get toxic emotion from losses. I agree. I mean, at some point you need some reinforcement that you're doing something right. I mean, you might trade for a year and a half and lose with a 30% winning rate. And then, of course, then you get the big run, and then those emotions kick in. You're like, it's too high, I better get out. But maybe it goes another 10% higher. I mean, that's why it always comes back to psychology. And, I trade the way I trade to keep my emotions in check the best that I can, right? I try to let my winners run. I also want a pretty good, winning percentage, because I know myself. I've been trading for so long that I can't trade the 30% win rate. I just can't. Some people are just built for it, wired. I'm just not wired for it, right? But I know that I have to let my winners run, so I really work on that as well. So it's a balance. It's a balance to fine-tune and calibrate yourself and your personality of risk risk and your reward tolerance, and everybody has different tolerances. Steve talks about boom and bust investors. I know some people, specifically a good friend of mine that has a ton of Apple, right? And he's just killed it lately. But if Apple went down for the next year, if Apple dropped 30%, he would be with it. He would write that all the way down as well. And nothing wrong with that, right? I mean, it's to each his own. But for me personally, I just can't do it. I don't think Steve could do it either. Do you imagine having a 25, 30% gain in something and giving it all back? Oh gosh, it's sacrilege. Steve says, big sell-off in metals today. Big reversal on that failed move to the upside. Yes, I know. Unfortunately, part of that metal, Steve, was silver today, but could have been worse. Definitely could have been worse. This is just one of those days where it could have been really great, but wasn't so great. I mean, actually, I'm very close to break even on the day, but when you have a big day, it's nice to feel like you're participating. But some days there's big days and you're not participating that much because of your position selection. But on the other hand, there's other times where the market's down huge, and because of your position selections, you don't lose anything, maybe make something, or hardly lose anything. So that's how trading goes. So all right, well, I better get to it. Well, it looks like the market is reversing here. All right, quickly, Johnson and Johnson. I did buy Johnson and Johnson back here on the 5th of um, November. We had this higher low V1. Here's day one. Here's day two. Day one washes out day one. Day two closes above day one's close, giving me a good risk to reward. Basically, I bought it right here at 13.59. The way this is, my stop's going to be below halfway. I bought it exactly, basically halfway. So if it had closed even a penny under where I bought it, I would have gotten out, giving me a good risk to reward. So did move up nicely yesterday, did move up nicely today. We did hit one profit target up here. But this isn't so bueno on the way down, but it didn't move more than one ATR away from my entry, so I'm not going to use any kind of trailing stop yet. It'd have to move at least one ATR from my entry. You know, you can see an ATR is from here to here, so that distance from here to here, it's up about here. So, you know, if sometimes you're going to wait for that ATR and you wish you hadn't, but you know, you can't make a million decisions on the fly every day. It just wears you out and it just burns too many calories, right? You got to just have a plan that you can trade for the long term and not burn yourself out. So I find that just having a plan, sometimes that plan is going to work for you, sometimes it's going to work against you, and you get frustrated when it doesn't. But, you know, look at trading for the long term. Get yourself a plan that you can stick with. Not always going to work. Sometimes it's going to work, but at least you can have a little bit more peace of mind. So anyway, glad that we hit one profit target up here for sure. Netflix. So I did buy Netflix back here on the 29th of October when we had the 520 EMA cross. This is a good back-tested approach to trading. Netflix doesn't win every time, but you know, the thing with these crossover trades, moving average crossover trades, is that generally your losses are pretty small, and every once in a while you can catch a really nice big outsized run in your way that helps to pay for all your losses and more, right? That's where the profitability comes in with the Netflix, with the moving average crossovers. And as you guys know, the key to profitable trading is very simple. Big wins are allowed, small wins are allowed, break-even trades are allowed, small losses are allowed. You just don't want to have those big losses. And the nice thing with the moving average crossovers is they really will keep you out of the big losses. And a lot of them are mechanical, so there's not, you know, you don't have to be just have a lot of discretion about it. You know, wring your hands. Should I? Shouldn't I? Should I? Shouldn't I? Right? You just stick with the signals. So anyway, this has been a good trade so far. Hit a few profit targets here, then a couple more here, and you can see I hit 2 profit targets today as well. One near the very, very high. So I personally, I am going to. We didn't reject the 100-day. We didn't reject the third ATR channel. We didn't reject the 70 RSI. But, you know, Jackson, you're kind of asking that question. Here's a previous high, right? Today, we rejected this high and we reversed strongly. We have a pin bar reversal to the downside. Dr. Elder calls this a kangaroo tail, where you open, you go way up, and then you come back down and close almost near the open. In this case, it's worse. We're below the open. So I'm going to go ahead and just lock this in. You know, this is just my personal opinion. It doesn't mean it's right. I'm just kind of sharing with you how I view the market. But, you know, we've had all this good news on rate cuts from the Fed. We've been anticipating the China deal, and the market, you know, in my humble opinion, has, you know, it's been kind of a carrot on a stick. Now that we have it, I'm not sure what how much more there is to look forward to. Doesn't mean, please don't misunderstand me, doesn't mean that the stock market can't continue to go up. But I think the market was rallying in anticipation of these good things. And sometimes when these good things finally come out, right, you have that carrot on the stick. When they finally come out, sometimes that's it. And, you know, this might be a buy the rumor, sell the fact. I don't know, but I am going to go ahead and lock in Netflix. I do not like how it was up much higher today, and now it's closing below its low. There's some volatility coming in here. We also went above this previous high. Market didn't like that, so this has been a good trade, right? I mean, from here we've phased out even up to there. So I am going to just go ahead, unless we have some miraculous recovery here at the end of the day, I'm going to go ahead and lock this in today. Silver. All right. Well, not so good for me, but a good, really good chart for a teaching example for a variety of different reasons. I did buy silver back here when the 5 crossed over the 20. It's a good back-tested approach. Immediately it went right our way, right? Went right my way. I got out of 40% here right at the open. So great, great, great start, right? Then we moved down, we moved down, we moved down. We had a nice day up here. The 5 was still above the 20. So this is a mechanical trade. I'm going to trade this mechanically, no discretion whatsoever. Here on this second move up, I took another 20% off. So I took 40% off here. I took 20% off here. So 60% off. I only have, right? So I locked in 60% up here, have 40% still at risk. Well, went down, went down. Obviously yesterday, I wish it had closed. The 5 had closed below the 20 instead of keeping me in for one more day. And then we had the big drop. And I talk about a 5% emergency stop, how it doesn't happen. It doesn't happen much, but it does happen. And you can see intraday, I had to pull the trigger on this trade and get out down here because it was 5% for my entry. So this is a good example of really why I like to phase out, right? I use the 520 as my entry, phase out when the market gives me some, phase out when the market gives me some, take chips off the table while the getting is good. So if something like this does happen, I've taken chips off the table and it mitigates the damage to the downside. So all in all, was this a positive trade or a negative trade? I would say it's slightly negative because of what I took off up here, what I took off up here. Yeah, it's negative, but imagine if I would have just if I had not phased out here, right? It would have been great, been great, been great. Then I would have had the full load back down here. So this is really, why I like to phase out, have minimization of regret, as Steve Burns calls it. And it's a good example here today of intraday it going 5% below my entry. So I don't wait till the end of the day. This could go down 10%. I didn't like to do it, but I had to do it. But it's a good example of showing why phasing is sometimes a really good idea. And it's also a good example of having an emergency intraday stop that you just don't wait till the end of the day. It's obviously higher than when I sold it, but that's my plan, and I always have to stick with my plan. All right, SPY. All right. Ooh, I'm running low on time, huh? All right. Well, you guys know the routine here, but I'm going to, in case we have some new viewers here, I'm going to go through this quickly. But one of the approaches that I use does not have anything to do with technicals or levels or anything like this. It just has good back-tested data. This is from Liz Ann Saunders at Bespoke Invest. With this backtest, you have two options here. They both involve the SPY, SPY, ETF. First option, you could buy the SPY each day at the open and sell it at the close. If you bought at the open, sold at the close, bought at the open, sold at the close, every day since 1993, you'd have actually returned a negative 13.9% for all your work. However, if you did the opposite, which is what I do, and buy the SPY at the close, then sell it the next morning, buy at the close, sell the next morning, buy at the close, sell the next morning. If you would have used this approach instead of this approach, you would have actually returned 634.2% if you did this every day since 1993. So it shows a clear advantage of holding stocks overnight. Since 1993, all the return in the S&P has come from the overnight sessions. That's what this is telling you, right? People bid it up in the after hours. They bid it up in the pre-market. They sell it into the open. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can clearly see that the move comes from holding it overnight. Day traders don't like to hold overnight. They feel like it's dangerous, and sometimes it is, but you can see clearly. The data shows clearly that that is where the edge comes from. I like this chart because it shows what a good long-term approach looks like. It's not straight up. You have ups and downs. But if you have an approach that has an edge and you can stay in the game long enough, that edge will play itself out. So with that being said, did have another nice overnight trade on the SPY and hit a yearly high today with this approach. Bought it yesterday at 307.10, sold it today at 308.60. So hit an all-time high using this approach. I've been using it since February 26th. It's been really quite profitable. But you know, Jackson, if you're listening, you know, we talked over here about, Greg, do you really want to do this up here near the third ATR channel? And no, I did not want to, because as we know, there's a lot of stocks that fail at the third ATR channel, about 90%. But the plan is you have to follow the plan. And look at these huge gains, right? Even though they were high. So anyway, great trade today, all-time high up there, which for this approach, which I'm very thankful for. We are lower than where it opened today. Looks like we rejected the 70 RSI, guys, right? So that's something to keep in mind. We rejected the 70 RSI on the SPY, and a lot of times when you, especially on the indexes, you reject the 70 RSI, it sometimes at the very least is short-term top. So I will be buying this again today at the end of the day, but this was a great trade. All right, VIX. So I did buy VIX back here on November 1st, bounced at the 30 RSI. I bought it next day. It opened lower, but I make my decisions at the end of the day. So I held it, went under 30, over 30, and also triggered this V1 here. Next day had a nice move up, took some profits off there. Did not take any profits yesterday, got close. My plan today is to get we did move more than one ATR away from my entry. So whenever I move more than one ATR away from my entry, then I'm going to implement some kind of trailing stop. My stop today is if we close below yesterday's low. Yesterday was 1910. We're 1907. So, you know, this may close above yesterday's low, in which case I will keep it. So anyway, pretty close to a break-even day today for me. But like I mentioned, you know, a few minutes ago, having having big wins, small wins, break even, or small losses is allowed. So even if the market's up and I actually have a down day, as long as it's a small down day, then I'm still okay, right? I still fit into the categories that I need to. And as long as you can do that over time, keep those losses small, having small wins, sometimes big wins, I think you're going to do okay. All right. Okay, well, I'm really running behind today, aren't I? All right. Well, listen, this is the time of the podcast where I do like to talk about trader psychology. It's very important. It's the best skill that you can learn in trading, the most important skill that you learn in trading. You have to follow your plan. The only way to do that is to keep your emotions in check, whatever that entails. I don't care if you have to put your Bjorn Borg headband on and, you know, go swimming in the morning. If that's what keeps you in check, then do it, right? But I like to go through Twitter. There's some really good Twitter channels out there, excellent ones, where the owners of the channel post every day about trading psychology. And when I see something that looks good and I think is helpful for the group, I cut it out and talk about it. But this is from Thomas Paine, one of the absolute best Twitter channels on there for trader psychology. If you haven't subscribed to him, at Trader T Paine on Twitter, you really should. But Thomas says sample size matters. If you do everything right, but the market doesn't cooperate right away, you may falsely believe that you are doing something wrong. Your system must be exposed to many variables in order to validate the results. So, you know, what he's saying here, guys, is if you have a good back-tested system and you start using it, but for the first, oh, sorry, guys. I'm trying to find a graphic to make this point, and now I can't find it. Are you kidding me? I know I just had it. Oh, well. Oh, yeah, here it is. So the point is, we know that the back test on the SPY works out well. But imagine if you would have started right here, right? You would have started right here, and for the next month it went down. You're like, this system sucks, right? Just because you use a good back tested system and it doesn't work right away does not mean that it's a bad system, right? I mean, imagine if you would have tried here, got out here, and then stopped using it and missed out on all of this, right? So sometimes things don't work. Even good back-tested approaches don't work. And what you see a lot of people doing is they look for an approach, a trading approach. They start, it doesn't work out for them. Then they hop to the next one. They're like, this isn't any good. They hop to the next one, right? Then they use that one, and maybe they're out of phase with that one. And they're like, yeah, all these trading approaches suck. You know, it's not true. You have to be consistent. So Thomas is talking about sample size. You know, give it, you know, I think Mark Rogers says 25 trades. You know, give it 100 trades. Out of 100 trades, then you will get a good idea of whether or not it has an edge, right? But don't just take 2-3 trades with something and go, this isn't good, and I'm going to hop onto something else. So sample size does matter. If you do everything right, but the market doesn't cooperate right away, you may falsely believe you are doing something wrong. Your system must be exposed to many variables in order to validate the results. So, you know, if you're trading, you know, and you're having a hard time and you're having a drawdown, don't think that you're a bad trader. If you're following your rules, you're a good trader. And, you know, if you're trading with good, proper trading principles in the long run, that should work out for you. So thank you, Thomas. I thought that was helpful, and I wanted to share it with everybody. All right. Yes, Jackson, regarding SLV, the emergency stops the market order. Yep, always. All of my orders are market orders, buying or selling. The only ones that are limit orders are my profit targets that are put in the night before. Murat says, Greg, you are more conservative than Dr. Elder. He says 2% loss is a max of position. Since you only allocate 10% of the equity position, 5% loss means 0.5% loss for your entire equity, right? That is exactly right. That's exactly right. Yeah. So, you know, listen, when Dr. Elder has a 2% loss, he's going to have fewer losses than me. But the losses that he has are going to be larger than mine. So there's always a catch-22. There's always, you know, a plus and a minus, right? I'm going to have more losses, but they're going to be smaller. Dr. Elder is going to have fewer losses, but they're going to be bigger. All right. And yes, I would lose 5% if I didn't phase 0.5 of my entire equity. But I phased out, remember, so it's not anywhere even close to that. All right. Well, let's get through this. Let's see how the market is reacting here. Yeah, it's given back a lot. So Apple was up $3, still too high up here. Really nothing I can do here. I have to wait for a pullback into the value zone, 520 cross under. I just don't see buying Apple in any near-term future here until we have a pullback. Adobe hanging in there pretty well. A few days ago it rejected the 70. Looks like it possibly, I don't think it rejected the 70 today. Did it? Let's take a look. No. So just too high for me. With a lot of stocks today, you're going to be hearing me say, I want to pull back into value. And what I consider the value zone is between the 1 ATR and the -1 ATR. The green here, top green, and the bottom green here. You know, if we had a nice V1, V2, close under, close back over the 200, that would also be interesting, but nothing today. Advanced Micro Devices up, but just extremely too high. You're never going to catch me buying stocks up here. You know, doesn't mean that they can't go up. I wasn't buying them here either, and they went up, right? But, you know, for my kind of trading where I look at risk to rewards and I look at levels, when we get up into here, I really am not going to have any trades. And if the market keeps just motoring up, well, that's just one of the, you know, the things I'm going to have to deal with in my kind of trading. But, you know, being up this high doesn't happen most of the time, right? So if it keeps motoring up and I don't have any positions, I'll just have to sit back, you know, watch YouTube, I guess, right? Until it gets back into where I become interested in it again. Amazon, look at that. I was considering buying Amazon if we had a close over the 200 day today. I was considering that, giving me a good risk to reward ratio. But look, we're above one ATR channel. Now we are coming back into value finally, right? So if we can come back into value, have some sidewards movement, look for a V1, V2, I'll be looking to buy Amazon. Boeing. You know, earlier there was a 520 crossover and it back tests pretty well, and it is in the value zone, so I kind of like where it is. But you can see the 5 now is 5,353.53, and now it's under the 20. Earlier today it was much higher, so I'll watch that to see if we get a close back above. Caterpillar, same thing, too high, need to wait for a pullback into value. Dow Jones made an all-time high today, but you can see opened here, went up, now it's closing at the bottom, you know, near the bottom of the range. This is what Dr. Elder calls a kangaroo tail, or other people call, you know, a bearish pin bar reversal. So nothing there, wait for a pullback. Walt Disney has earnings after the bell, so I can't get involved with Disney, so it'll be interesting to see what happens. I would like to buy Disney back down here. I did buy Disney here and had a nice trade, really nice one-day trade on this, but you know, it did bounce in this area, so I'll be looking back down here again if they miss earnings. Etsy is just under massive distribution. You know, guys, I bought this here, had to sell it here. Imagine if I wouldn't have sold it, and then I said, oh, it's too low, I'm going to hold it. And then I held it. And then I held through earnings. I mean, if you think it's too low here, then how could you possibly sell it down here? And if you think this is too low, how could you possibly sell it down here? It's one of the worst psychological cycles you can get into, is when you make a determination that something too high or too low, you go all in on it, and then it just continues to go against you. What do? If you think this is low and you don't want to sell, how could you possibly sell here? The fact is you should, but the psychology of it is brutal, right? You get out here and then it rallies and you're like, it hurt more for me to lose out on the up move than it would for me to lose real money on the downside. It's I mean, really huge piece of advice, everybody. Get out when you're supposed to, and don't get caught in one of these vortexes, because it will mess with your mind. Steve knows what I'm talking about. It's horrible. And the way you can avoid it is just to get out quickly, take that first loss. Did you hear that? Did you hear the emotions in my voice when I told you that? This is coming from war stories that I have been in. I'm not just giving you some BS, man. I'm not just, you know, I am really telling you, I have been through this firsthand, and you do not want to do it. Ford under the 200, coming back into the value zone. So we might look for some kind of V1, V2. Facebook actually down today, back in the value zone. So at least we're getting some stuff back into the value zone, right? You know, this might set up for some new trades here, but we just need to be patient. Good thing we didn't buy up here, right? You know, that's why I don't buy up here. You look at the news, everything looks good, but I just want to wait for it to come back into value. Five Below has a nice higher low V1 here, V2. We rallied up into the value zone. Day 2 washes out day 1. Looks like day 3 may close above day 1, but see this big gap here? So that's going to prevent me from taking this, from taking that. Gold. Well, on the bright side, I did get out of gold yesterday. I did get out of gold yesterday because the 5 did close below the 20. So at least I have avoided this on gold. Google, huge strong day. Did take out the previous high. It looks like it's still above the previous high there. But I can tell you one thing for sure, Z's, we rejected the 70. I don't know why I can't grab this line here. There we go. We are above this previous high, but look, we're to 69.94. We did reject the 70 RSI. If it were to close, if I had this and it closed under 70, I would definitely get out. Goldman Sachs, very, very strong today. So if you would have used this 520 crossover and just mechanically traded it, you would have done great. But you'd still have to hold it. And by the time it crosses under, it might be back down here. You never know. So, you know, plus and minuses of mechanical. Home Depot, V1 to the downside, lower high. V1 to the downside. Looks like under 50 RSI. I'm not going to short this, but this is something I would look at. IBB, need it to pull back into value. Intel, very, very strong. I just can't get involved. I can't play this game up here. I have to wait for a pullback. Russell 2000, down actually today. Again, wait for a pullback into value. Did buy this with a good risk to reward, just barely over the 200. If it closed underneath, I'd get out. If it moved our way, then I'd be able to participate in it, which is exactly what I did. Got out here. Johnson & Johnson, trying to hold on to a gain of the day, but very glad we hit one profit target today near the top. Coca-Cola, 38.80. I would be looking for Coca-Cola. I would be looking for something down, kind of trying to move sidewards here at the third ATR channel. Look for a V1, V2, or look for a 30 RSI in here, somewhere down here at the 200. I think that would be a good dip buy. Lockheed Martin looks like a V1 to the downside. So nothing there. Rejection of the 50 RSI. MasterCard up just a little over %. Look, we went above value, moving into value, sidewards movement. If we could have a stab down and reversal, that's what I would look for. McDonald's. So I've been watching McDonald's here pretty closely, waiting for a good risk to reward. Nothing has made sense to me yet. If we could get a pullback to the 30 RSI again, or a close back over the 200, that's what I would be looking for. But just in the meantime, just have to sit on my hands. Altria Group, we came back into value. We rallied. Now we're lower. See how we have a lower high? Whenever you have a lower high, you have to wipe out that first low before I can get involved on Altria. Merck, okay, above value, into value, sideways movement. This is exactly what I'm looking for. Now, if tomorrow stabbed down and then closed back up and created a V1, V2, gives me a good risk to reward ratio in the value zone. That's what I would be looking for. Microsoft still has to come into value. Netflix, I am definitely going to get out of this today, but very thankful that I locked in up here and here when the market gave it to me. So I am definitely going to be taking this off the table today. Nike, nothing really on Nike. Philip Morris, big down. I mean, we had this big move up. Notice we rejected the third ATR channel. Surprise, surprise. Now we're getting close to coming back into value. I'd like to see if we could get into value, have a sideways movement. Actually, a buy down here off of the 200 would be excellent. But either pull into value, sideways movement, V1, V2, or maybe a close under, close back over the 200. PayPal, nothing much on PayPal. Q's, looks like we did reject the 70 RSI up here. Above 70, below 70, above the third ATR channel, below the third ATR channel. So I'm not going to short this, but this, this is the kind of thing that I would really wait for and be patient for a short. We bought this here with the 520 cross, and then we got out. I can't remember now where we got out. I think it was somewhere in here. I think it was somewhere in there. Silver, of course, that was our stinker for today. Bought here, phased out, but then I would just stuck, I really wanted to sell it when we came down here. We lost the 5 and the 20, but remember my plan was to trade it mechanically like a robot. And so I saw it through, and this time it didn't work out. S&P, of course, we had that nice overnight trade. I'll be buying that again at the end of the day. Bonds starting to look interesting. I like this double bottom here with the bullish divergence. These MACD bars are very deep. We're lower now than this low, and this is not as deep as this. So this is a good setup. There is just no trigger. If it had gone under 30, over 30, that would have been my trigger, but it did not get under 30 or actually close to it. So, if we can go tomorrow, we go under 30, back over 30, I would buy that. Conversely, we're under the 1 ATR channel. So if we rallied in to the 1 ATR channel, have a couple days down, and then higher low V1, V2, I would also be interested in that. Tesla, Big strong day today. Nothing there though, too high. Twitter looks like it's not going to hold at this moment. It looks like it's not going to hold its 20 RSI. It is possibly setting up for a V2 tomorrow, though we'll have to see. United Health Group, just too high, nothing there. Oil has not liked prices above the 200-day. You know, 3 out of the last 4 days we tested and rejected. Okay, VIX, I'm going to have to watch VIX carefully because if it does close under 1910, I don't know why that says 1911, I will go ahead and just lock this profit in. Glad that I locked some profits up here, and then the rest of the trade is still profitable over my entry here. Verizon, nothing there. Walmart, strong, nothing there though. Energy Select, really nothing there. Financials, bit of a pin bar reversal up here at the top. I need to pull back into value. Real estate's getting interesting. It did not go under the 30 and back over the 30 though. So I'm going to watch that one for tomorrow. Utilities look pretty interesting here, guys, and I'll tell you why. We went under the third ATR channel, over the third ATR channel. We bounced about right at the 30 back over, and we went under the 100 and back over the 100. So, you know, having this confluence of a 100-day moving average and the third ATR channel and the 30 RSI all coming here at the same place, I'm going to buy this. It's going to give me a good risk to reward. I'll probably just use a close back under the 100 if I'm wrong. So give me 1 second. I have to move Kitty around real quick. Sorry. She knew I was in a hurry. She knew I was in a hurry, so she ran away from me. Okay. All right. So, bam, losing my voice. Sorry about that, guys. All right. Apple, no, I don't even know I have that on there. Boeing does not look like it's going to have the crossover. Real estate I don't like as much. I do like utilities. I mean, if we look here, how low we got to a 33 RSI, very low 30s. We went under the 30 TR channel, back over. We went over, we bounced from the 33, we went back over. So I believe this is a good risk to reward. Even tomorrow, if we close underneath the 100, I'm out, right? But if it goes up, I may be able to go right up to here. So I am going to buy XLU at the end of the day, and that looks like about it. So Johnson & Johnson, I am going to keep, even though I don't like the price action here today, but I'm not instigating a trailing stop here yet because it did not move halfway or 1 ATR for my entry. Netflix, I am definitely going to get out. That's going to sell autopilot at the end of the day. SLV, I hit my emergency stop already in the day, so that's taken care of. SPY's locked and loaded. I will buy that, but at least we're going to get a little discount on where we sold it today. And VIX is it's right there. So, all right, let me go ahead and just take care of XLU. This is going to be a full position because it's over the 200. All right. Oh, I thought we had like 2 minutes to go. I guess I could have waited a couple minutes on that, but oh well. Johnson & Johnson's a keeper. Netflix is a giver backer. But that was a good trade. I mean, we phased out some. I mean, from here to here to here, it was 5.3. I didn't get 5.3 on the whole trade, but at least we did phase out some at that level. I mean, much better to phase out here and here than back here, right? And even here and here is above where it is here. So I'm just going to go ahead, take this off. I think the indexes are pretty high here. It wasn't really great price action today, testing the 70 RSIs here. And then I'll get to your comments. I see that we have a lot of comments. Sorry, guys. But I will get to them for sure. Oh, Mount Doji? Okay. Let's look at this real quick. Sorry. Haven't been looking. FPI. I mean, it's a nice V2. The day one's bar is larger than one ATR channel, which is a little bit of red flag for me. But I mean, it looks like we might be closing over 50, definitely a V2. Problem is though, on a V2, where's your stop going to be? I mean, if you use a halfway the washout bar, it's going to be way down here. Do you have that to the upside? I don't know. I guess I'm saying I don't like this bar being larger than one ATR. There was no sideways movement either in UTI. Yeah, I like that one much better because here you have a couple days sidewards movement. You have a nice V1 here. Looks like it's over. I like this one way better, Mount Doji. I like UTI way better. For sure I do, than that first one. All right. All right, so I bought ULX at 6203. Bought that a little premature there, but it's all right. But close under the 100-day, right? That's it. Close under the 100-day. That is it tomorrow. Johnson & Johnson's fine. Netflix is gone. Silver rallying here. I had to sell it though, right? It hit my stops, my 5% emergency stop. You don't get these emergency stops a lot, but when they happen, and you have to respect them. All right, so the Dow's rallying a little bit. The question for me is going to be on the VIX. Is it going to close below? Yes. All right. So I did sell the VIX right there at the last second because it did close below the low of yesterday. So, okay, out of VIX. And where did we buy SPY at? So we bought XLU at 6203 and we bought SPY at 308 18. All right, well, slightly down day today, very slightly. That's okay, but it's kind of a bummer, right? Not to participate in the rally, but it's the silver trade that got me today. But again, it's within the parameters. Big wins, small wins, break evens, or small losses. And unfortunately, I was in the small loss category today, but that's okay. All right. Well, listen, I'm going to get to your comments and questions. Before I do, I just real quickly want to let everybody know I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I have a 10-hour course. It's one-on-one with me, 5 2-hour sessions, and I will teach you everything I've learned over the last 24 years of trading. You know, I've studied with some famous authors and traders and, combined what I've learned from these different authors and traders into my own approach. And that's what you see me do here. So, hopefully what you're seeing on the live stream is helpful. But, if you're interested in having a deeper understanding than what I do here, then I think the one-on-one lessons would be very helpful to you. And I think it's a really good investment in your trading career. So, if you're interested in taking this course with me, the one-on-one course, let me know. You can send an email to me. The email's in the description of this video. You can also reach out to me on Twitter. But before we decide we're going to go ahead with the lessons, I'd like to have a 30-40 minute Skype call with you just to get to know you a little bit better, learn more about how you got into trading and what your challenges have been and what your goals are. And I'll try to put together a lesson plan, to help you achieve those goals. And then of course you can interview me as well just to see if it's a good fit. So if you're interested, please reach out. I think you'll be happy with it. And my email's in the description of this video, and you can also reach me on Twitter. And then also, if you like this live stream, I would really appreciate if you would hit the thumbs up button. It helps to promote the channel, get more people here. There's a lot of people that need help with trading. There really is. So you can help me reach those guys by hitting the thumbs up button. So I really would appreciate it if you could. All right. Sorry, let's see here. I didn't have a lot of chance to get to the comments. So Jackson says, although it sucks totally what you should do, I'm young in the game, but I'm writing rules for myself, and I read to really try to adhere to, and that's one of them. Yeah, when you first start out trading, you learn what you can learn, but then you kind of have to do it, right? To kind of see what feels good for you. If you have to make a little adjustment, do something different. So looking forward to our call tonight, Jackson. Johnny says, I sold my ALB today near the high of the day due to the huge move for a 16% profit. We'll buy again after it returns to the value zone. Oh, fantastic, Johnny. Johnny has some monster trades. Holy smokes. Johnny, nice going, buddy. Wow. Yes, I think that would be a really good idea to wait for the value zone now. I mean, look, you have the 200-day up here. You have the third ATR channel up here. I think this is going to be definitely, going to be some resistance up here. But yeah, I mean, I think a move back to the value zone. But congratulations, Johnny. Proud of you. Jackson says, regarding SLV, that emergency stop is a market order. Yes, that's right. And again, Jackson, all of my orders when I buy or sell, they're market orders unless they are profit target orders that I put in as limit orders the night before. Yes, how you doing, Yas? Phase out. Learned a lot from this SLV trade. Thanks, Greg. Yeah, I mean, it wasn't such a hot trade after all, but it does show you why it is a good example to, why I like to phase out, some of the benefits of phasing out at profitable levels so that if you do have a big monster move against you, you've mitigated. I got out of 60% up here. So this was not good, but it was only on 40% left, right? In addition to the profits I had. So when it all comes out in the wash, it was a small loss, but if this would have been totally mechanical, it would have been turned a great gain into a big loss. And then of course the emergency stop here is a good teaching moment as well. Hey Bing He, what's going on? Good to see you, my friend. Bing He is our friend from Singapore. Okay, Murat says, okay, we talked about that. Yep, he uses Dr. Elder uses a 2% loss. Douglas Stouffer. Hi, Douglas. Hi, Greg. S&P futures hit 70 RSI today. TLT blew longs out today as well. Yeah, so let's see. Well, look at the S&P. It did manage to close back above the 70. So if you were long in this trade for whatever reason and you were adhering to the 70, looks like somebody like that would have kept this. If it were me and I was long this for whatever reason and it went above 70 and then closed below 70, that would be my signal at least to take profits. And then let's look at TLT. Yep, TLT. I kind of like big picture what's going on with TLT though, because we have this low, we have this leg down with very deep MACD bars. We had a rally, we had some green MACD. Now we come lower, but you can see that the reading of the MACD here is not as deep as it is here. And what that means is from a momentum standpoint, even though this looks like it's a lot of momentum, the downside, it was not as strong as this move. And so the implication there is that if the second move down has less momentum than the first, that we might be running out of selling steam and therefore possibly might reverse back up. So what I would be looking for on TLT, I really would like to see a close under 30, back over 30 here, or a move back into the value zone with a higher low V1, V2. Thanks for coming, Douglas. Nice to see you here. Hope you come back. Max says all losses come from stops, but if you don't have stops, you will lose the account. That's exactly right. So you want to take profits before stops will hit. In my humble opinion, the exit is one of the hardest part of trading. I agree. I obsess on exits, Max. I absolutely obsess on exits. And you're right. I mean, all your losses come from stops, but every once in a while, if you don't use stops, something's going to go to zero and you're going to lose the whole thing. So they're a necessary evil. That's why, I like to trail stops. That's why I like to take profits, play offense, defense. Offense on the way up with profit targets, defense on the way down with trailing stops. All right, so Mount Doji, hey buddy. And so I talked about FPI and UTI. Jackson says, Greg, when checking if stock has moved more than one ATR, you are measuring from the entry price to the high the stock has moved, yes, as opposed to entry to current day's close. What I do, because the ATR channels can move, what I do is I measure what the most current one ATR is. Then I overlay that over onto my entry, right? I don't take the measurement of when it happened. I take the most current. Then what I do is I take that distance, I add it to my entry and go, did the price move one ATR? And it has not, right? That's why I'm not implementing a trailing stop yet. Does that make sense, Jackson? Murat, do you remember what I said yesterday about TNT and SLV? You are selling SLV and buying TLT bond return. Yeah, I do remember that. You are selling SLV and buying TNT. Although silver and bonds were both down today, right, Murat? But I didn't buy TNT, right? I bought XLU, but I understand what you're saying. Bond returns improved a lot, so money's starting to flow into them. Yes, that's right. That's right, because the yields are going up. Max, a lot defined a lot. John says, war stories. I own one. That is one share of stock up $125 since 10:30 entry. I phased out 75% of the position. Your influence. Symbol BH.A or BH/A. Big Gary class. I don't think I can look at a symbol like that, John. War stories. I own one. That is one share of stock up $125 since 10:30 entry. I phased out 75% of the position. Your influence. Is that good or bad, John? Is that good or bad? I hope it's good. 125 bucks. That's fantastic. BH.A. Yeah, I can't look at that one. So you've been phasing out and you have one share left, but you had more shares to begin with and you've been phasing out of 75%. Okay, so you bought four shares, right? Murat says, Max B, in early September, some government bonds had a negative 40.44% return. Now they are giving a 0.1% bond trade. Yeah, well, it's not a big yield, but if you bought them at negative, it is. Still the spread making huge difference if you are going to invest $1 billion. Murat, you might be thinking, how come you put $1 billion with a negative 44 yield? Yeah, because if the yield improves, then you make the difference. Yes. Do you ever scale in? No, I don't. Yes, I've considered it. I've played around with it for the years. But I just decided that I was just going to stick with one entry, scaling in with the one and then scaling out. Because then I have a lot to do. I got to scale in, I got to scale out. And I'm trying to make it simpler. But I don't think it's a bad idea to scale in and scale out to scale in either, just as long as you really have a plan, Jackson says, thanks, Fred, clearing that up, moving one ATR from entry. Max, there are some interesting theses for equity metal bull case based that currencies and central bank papers will be basically losing value over the next 5 to 10 years. Think about it. Negative yields, huge amount of debt, QE over, more QE historically, it ends up the same way. I agree, Max. I agree. When I look at the markets, I get concerned, honestly, but that's just my opinion. But, you always have to fight trading your opinion compared to what the stock market is actually doing, right? It's okay to have opinions, but if you're a price action trader, have your opinions, but trade the price action. John says, try BAH. Booz Allen Hamilton, is that correct? John, is this right? BAH 550? Mount Doji says, still wishes I was in FOCS. Looks like earnings are tomorrow, Mount Doji, at least on my chart here. I don't know, unless we're looking at after hours stuff. Nope. Mount Doji, it looks like earnings are tomorrow, so unless they were today for some reason, but this says tomorrow. Yeah, says, thanks. I see your point. It adds another variable to complicated business already. Yes, exactly, yes. But I don't think it's a bad idea. But for me and with the podcast and all this kind of stuff, I just want to simplify it. So I typed in BHA, John, and it doesn't bring anything up. Max says the massive wave of buybacks is basically borrowing money at low interest rates and repaying it back later when cash value of it will be massively devalued. Yep, I hear you. I definitely hear you, Max. But the thing is, we don't really quite know when things like that are going to happen from a macro standpoint, macroeconomic standpoint. It's hard to really factor all these things. I'm just not smart enough to do it all. So I just defer back to the charts, and I assume that the smart people that can figure it out will move the market that way, and then I'll follow them. Jackson says, risk reward question. You typically do 10% per position per trade. What is the max percent of your account that you would be typically holding in positions? 60% is the max, Jackson, that I would hold. 60% is the max. Now listen, I use 10%. Some people use 20%, right? But if I could use 20%, as well, but I wouldn't have more than 3 positions, because I could have 60 positions at 1%, right? If we want to take it to an extreme. I don't think I'd have 1 position at 60%. I really think that 3 positions at 20% is like at the max range that I would do, but I prefer to have 6 positions, 10%, but I don't always have 6 positions, right? So I'm not always at 60%. I think my average, because of phasing out and stuff like that, I think I'm usually at about 45%. Oh, FOC, Mount Doji says FOC earnings was this morning. Oh, I see. Bummer. But listen, Mount Doji, you did the right thing, right? I mean, you never quite know. And remember, the main focus, number one focus here always, guys, always is risk or capital preservation first. I mean, here's an example of Roku, down 16%. So, if you decided to gamble on earnings, not doing so hot today, right? So I went to the gym this morning. I usually don't go to the gym in the mornings. Not sure what I was thinking. I have to teach tonight, so I couldn't go to the gym. So I got up early, went to the morning. Man, those morning gym people are so lively and chirpy. Ugh, that's a different breed of cat there. I'll tell you what. It's like, who are these people? I'm just jealous. I wish I was a morning person. I'm not. But what a different group of people in the morning compared to the evening. Everybody seemed all put together and just lifting and chatty. And I was like, who are these aliens? But anyway, glad I went. Glad I got it out of the way. All right. So, looks like we have a few things going up after hours, which is good. Boy, I feel like I'm losing my voice today. Jesse, hey. Jesse says the symbol is BH. Oh, okay. BH hyphen A. I don't have that either. Oh, let me try this. Haha. I see. Okay. So you bought a 1030 crossover, I believe. Well, that looks like it just crossed today. Let me go back and look at his. Maybe it was the SMA. But you're up 125 bucks. That's the takeaway, right? Okay, his entry was 425 and now it's at 550. Fantastic. Mount Doji, I picked up lift yesterday, still holding. Oh yeah. Well, look, above the value zone, into the value zone. Kind of held here, but yeah, it's a nice V1 there for sure. Up today. Good job, Mount Doji. Jackson, yeah, my voice is okay, bud. Yeah, we're on for tonight. I'll be fine after my hike. Rest my voice a little bit. I actually have a lesson tomorrow night already. So yeah, let's go tonight for sure. John bought it October 30th. Look at that, everybody. Right there. What a trade, John. Beautiful. How are you going to manage that trade, John? Going forward. We're at the 6 ATR channel. Doesn't mean it can't go higher, but that's a bit of an extreme. We have the 200 up here. We're above the 70. Dumb luck. Well, technically, John, it was a higher low V2, right? We make a low, we rally. Here's day one, here's day two, washes out day one. The day you bought it closed over day one's close into the value zone. So that's a legitimate entry the way that I view trading. It's a higher low V2 in the value zone. Kurt, what's going on, bud? I've been thinking about you. I've been wondering how you've been doing. Good to see you. Thanks for coming by. Better late than never. Or maybe you were here the whole time. You just didn't say hi. How are things going, Kurt? Any trades? Kurt's one of my former students, so I know he's been kind of waiting patiently for a trade. So please keep me updated on your trades, Kurt, or if you have any questions. By the way, you guys, with my one-on-one students, when I'm done with my classes with them and the courses, it doesn't mean we're done, right? If they ever have questions in the future, I always tell them, feel free to contact me. If you want to have a little brush up Skype call, totally fine as well. Kurt says, I'm always here. Oh, it's good to hear, bud. Everything good. Playing it safe. Market high here. That's right. That's right. Well, I'm really glad to hear that. I'm glad that you're being patient, Kurt. I mean, gosh, guys, patience is such a huge thing in trading. Like, I know we always feel like we're traders. We need to be doing something. It's not true. You need to do something when there's something to do, but you also have to have the patience of doing nothing when there's nothing to do. All right. Well, Kurt, thank you for coming by, bud. Good to see you. Stay in touch. All right. Please stay in touch. I want to know what's going on with you and your trading. John, good to see you. Nice trade. I don't care if it was dumb luck. Congratulations. Jackson, good to see you, my friend. Jesse, really great to see you. Keep in touch. Let me know how you're doing, okay? Mount Doji, good to see you, bud. Max B, good to see you. Thank you for coming by. Yas, always good to see you. Thank you for coming by as well. Murat, of course, Murat is always a great person to have here. Good commentary. Really like how Murat trades, how he thinks. Douglas Stouffer, good seeing you. Thank you for coming by. I hope you keep coming back. Appreciate you being here. Bing He, good to see you. Thank you for getting up early and tuning in. Johnny, fantastic trade. Johnny has some monster trades, man. I'll tell you, Johnny is the king of monster trades. Good to see you, John. Hope you keep coming back. Steve, thank you, sir. Always appreciate you being here. Always an honor and a privilege to have you here. And I'm always excited when you're here, and I know everyone else is too. So thank you for coming by. And I think Steve's sitting in cash right now too, right? Just like Kurt, just waiting and being patient for some pullbacks. Marco, good to see you, sir. Hope you have a good evening in Europe. And if I can ever help you with anything, please let me know, okay? Joshua Kaufman, thank you for coming by. Hope you come back. And I think that is it. Anthony, what's going on, buddy? I was thinking about you too. Anthony's one of my former students. How are you doing, Anthony? He says, I'm always here too, one way or the other. What's going on with your trading? Any trades? Please keep me up to date. You know, I like to follow my students' trades, see how they're doing, see if they have any questions. Johnny says, have a good one. I'll be back on Monday. Okay, bud. Sounds good. Seems like Johnny has a long weekend. Awesome. All right. Well, I think that's it. But Anthony, if you can hear me, man, stay in touch. Really want to know how you're doing. If you have any questions, anything I can help you with, and if you have any trades going on, really interested to follow those, okay? So I'm going to get out of here, go for my hike, rest up my voice, and then I've got a lesson tonight with Jackson, so I'm looking forward to that. We're going to do some serious chart work, some serious simulation tonight, so be ready, Jackson, but I know you always are. All right, everybody, have a good day. Go out, do something nice for somebody today, all right? And always appreciate you guys having you guys here. Oh, Friday through Sunday reserved for family. I think that's a very good policy, Johnny. I think it's a great policy. All right, well, I think that's it. Thanks for tuning in, okay? Jackson, let's do it. Night all. Okay, take care, everybody. Appreciate you coming. Hopefully see you tomorrow. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.